Assalamualaikum warahmatullahi wabarakatuh. In this video, my group and I will be presenting our assignment on Islamic accounting principles affecting financial reporting of different types of financial institutions.
Hi, Assalamualaikum. My name is Nurul Eliza binti Jaafar. My ID number is 2001004. Today, I would like to present about the difference between Bank Islam in Malaysia, conventional bank, and Islamic bank. Different banks will have different kind of financial reporting that vary based on the respective organization, unique performance as well as their respective financial statement basic of the preparation. For conventional banks or financial institution, International Financial Reporting Standard (IFRS) is commonly being their financial reporting basic of preparation, while for the Islamic banking institution will usually choose for the financial accounting standard, which we call FAS, as their financial statement basic of preparation. FIRS was introduced in 2008 together with the International Accounting Standard Board (IASB), while for the FAS, the standard were developed by the Account and Auditing Organization of Islamic Financial Institution, which we call AFI, in 1991 together with the rise of awareness among Muslims throughout the world to move toward more to the Islam economy. So next, I will talk about the background of the chosen bank. The first bank is Islamic Bank in Malaysia, Al-Rashid Bank Investment Corporation Malaysia Berhad. Al-Rashid Banking and Investment Corporation Berhad, or Al-Rashid Bank Berhad, is one of the world's largest Islamic banks. Was founded in 1957. The bank started with the main activity of providing Islamic financial and money exchange services before developed to provide various banking products to satisfy customer needs, especially for the Muslim. The next one is conventional bank in Malaysia, Bank Berhad. Bank Berhad is also familiar called as Bank Group Malaysia, is one of the Malaysian largest banking conglomerates with rental banking, wholesale banking, Islamic banking, and life and general insurance as its core cooperation. The last one is Islamic Bank with FAS standard compliance, Jordan Islamic Bank. Jordan Islamic Bank was established in 1978 as a public shareholding limited company to carry out all of the activity of banking, financing, and investment business cooperation in compliance with Sharia law, as well as in line with the provision of Jordan Islamic Bank special law. The bank's transaction and contract are subject to the supervision of a Sharia board composed of special Sharia scholar. Jordan Islamic Bank (JBI) aims to satisfy the economic and social needs of citizens in the field of banking, finance, and investment in accordance with the principles of Islamic Sharia.
What are the basis and financial statements preparation for those types of banks? Al-Rashid Banking and Investment Corporation Malaysia Berhad, which is an example of Islamic bank in Malaysia, and Bank Malaysia Berhad, which is a conventional bank in our country. Both of their financial reporting is in accordance with Malaysian financial reporting standards and the International Financial Reporting Standards, and also satisfy the regulations of the Companies Act 2016. Therefore, they have similarities in their financial statements, as for example, similarities of items or components and their financial position. Both of them have derivative assets, which is an instrument under hedge accounting. They also have financial investment at amortized cost, financial investment at fair value, and some other similar categorization of items used, which shows the presence of the requirements of MFRS 9 financial equipment in both of the financial statements. 9 financial instruments regulates the financial reporting process in this 4 areas.
The areas are the classification and measurement of financial assets, accounting for changes in credit risk in financial liabilities, impairment, and hedge accounting. A hedge fund is used to lower the risk of overall losses, and one of its common instruments is the derivatives. Hedge accounting is an accounting technique to modify the normal basis of recognizing gains or losses arising from hedging instruments to have both recognized in a statement of profit or loss in the same accounting period.
For Jordan Islamic Bank, the financial reporting complies to financial accounting standard issued by the ACC. One of the evidence is the application of the FAS 33 in locating the recognized losses from sale of financial assets of owner's equity under the fair value reserves in the statement of changes in equity.
My name is Nuriana Haifa binti Al-Rugani, and for today I will explain about the Sharia compliant alternative to conventional financial instruments. So in conventional products, we have 4 types of product, which is the first one is saving or current account, the second one is fixed deposit, and the third one is property financing, and the last one is letter of credit. The Sharia compliant alternative for saving or current account, Al-Rajhi saving account I, and also Al-Rajhi current account I is used for Al-Rajhi Bank, and also we have a saving account for Jordan Islamic Bank, and the contract that being used for saving or current account is we know as Qard and also Wadi'ah yang Permanah. The next one is about fixed deposit. So under fixed deposit, Al-Rajhi Bank Berhad have commodity murabahah term deposit I, and the contract that being used under fixed deposit is commodity murabahah, and the second one is wakalah bil ujrah. The next one is about property financing. So for Al-Rajhi Bank Berhad, they have home financing I, and the second one they have business premises financing, and for Jordan Islamic Bank they use my house financing, and the contract that being used under property financing is the first one is istisna, the second one is musyarakah mutanakisah, and the last one is ijarah muntayah bitamlik, and the next one is letter of credit. So Al-Rajhi Bank letter of credit I serve as confirmation that the seller received payment for the imported of goods or services, and the contract that being used under letter of credit is al-wakalah and also musyarakah. Next, how it works between Al-Rajhi Bank and also Jordan Islamic Bank. So, from the perspective of saving or current account, Islamic investment, they will use our fund or the client's money into a Sharia alternative investment, but at the same time, they will keep their principal. When the client asks for their money, then the money will be available. Next, how it works for fixed deposit. So the Islamic alternative also refers to the trading of commodities, or we call as tawarruk, which act as the underlying asset that we buy from bank, then appointed the bank to act as an agent to sell the asset with some profits. That's how it works for property financing. So buyers, they will ask the bank to buy the property that they want. So they will survey the asset or the house that they want to buy, and it will be leased to them by agreed monthly payment for both party. Then they will make a new contract for a specific period, which is the contract of buying the property and also the transfer of ownership. Because when the period has finished, the ownership will be transferred from the bank to the client. And the last one, how it works for letter of credit. So the Islamic letter of credit will have a bank to act as an agent with fee by issuing a letter of credit.
I will present question 4, which is differences of components in the statement of financial position. Assets. The first is deposit and placements with banks and other financial institutions. All three banks have a deposit and placements with banks and other financial institutions. But Jordan Islamic Bank use another term, which is Al-Qad Al-Hasan, which is one of the Sharia alternative for saving, deposit and investments. Financing advances or ijarah mutahiyah bita'li asset. All three banks have financing advances, but Jordan Islamic Bank state the ijarah mutahiyah bita'li is Sharia alternative of property financing contract as a term that could show the presence of riba, which is the word advances, do not comply with the accounting and auditing organization for Islamic financial institution AOF and financial accounting standards FAS. Then financial investment at fair value through other comprehensive income or financial asset. In the statement of financial position, only Jordan Islamic Bank put another term for financial investment at fair value through other comprehensive income, which is financial asset. Lastly, deferred tax asset. Jordan Islamic have deferred tax but include in the list of financial asset at fair value through owner equity, liabilities, account payable or other liabilities. M-Bank is a conventional bank that consolidates the account payable on the other liabilities, while Al-Rajahi and Investment Corporation and Jordan Islamic Bank, which is the Islamic banks, give detailed information about account payable with put term of bills and receipt and the general term of accounts payable for avoiding uncertainty in their bank statements. Deposit from customers. Jordan Islamic Bank receive deposit from customers through various kinds of Sharia compliance contract and will be specifically recorded as the name of the contract, such as Al-Qad Al-Hasan. Lastly, list liability. M-Bank Berhad also have list liabilities, but the bank categorizes them together with other liabilities, while Islamic Bank disclose most of the liabilities because uphold the concept of accounting adequate disclosure. Equity. The item is reserves. All three banks have reserve, but Jordan Islamic Bank details the reserve, which are statutory reserve, voluntary reserve, and fair value reserve to fulfill the criteria of FAS 1 and IOF SFA.
Assalamualaikum warahmatullahi wabarakatuh. My name is Abdul Qadir Jilani bin Abakar from BPFIFA, and I'm gonna talk about the difference of component in the statement of comprehensive income for conventional bank, Islamic bank, and also Islamic bank that included in financial accounting standards. The first one is layout for Islamic bank and conventional bank in Malaysia, and Islamic bank that been included in the financial accounting standard, which is FAS. After being observed, you can see that all the types of Islamic bank that been used in Malaysia starts with net profit or loss, while conventional bank starts with gross profit or loss. Islamic financial institutions should uphold the distribution policy that the profit to be distributed does not include any unattributable expenses. The next component is accounting recognition concepts. For Islamic and conventional bank in Malaysia, there are net unrealized gain or losses included. As for Islamic bank that has been included in the financial accounting standard, it is only include realized losses from sale of financial assets at fair value through owner's equity. According to the Islamic accounting recognition concept, AAOIFI's SFA2, they say revenue shall be recognized when realized. The profit or income distribution. There is distribution of profit to equity holder at the end of SOCI for the conventional bank and Islamic bank, while for Islamic bank, which include in FAS, has no distribution of profit to equity holder at the end of the SOCI. Distribution of dividends is being done for Islamic bank in the statement of changes of owner's equity.